during this COVID-19 situation, all of us, we are trying to save money. We are trying to put more money into banks and FDs, right? Well, that will be our biggest mistake. Hi guys, my name is Harsh Goyla and I am an investor, trainer and mentor in stock markets. Now, the COVID-19 crisis, the current situation. Statistically, if I talk about, people are scared. Why? Because there have been pay cuts, there have been salary cuts, businesses have shut down. That is why people are trying to save money. ये एक mindset बन गया है to put more amount into cash. And when I say cash, I mean putting money into banks like savings account and FDs. Basically, I'm talking about liquidity. Right? So people want to be more liquid in cash. So when I say cash, I mean specifically that. Now, I am here to tell you that during this current economic situation, that is the worst thing you can do. Now, I'm going to explain you economics in a very simple way and what is the current situation, so that once you start reading news, once you get more information, you'll be in a position to understand what's happening. Okay? Now, if you see for the past decades, whenever we see this, that the countries are going into a problem, best solution kya hai? To give them the liquidity. Right, which is also known as stimulus packages, which is known as quantitative easing. I think I covered this in the past video also, but मैं दोबारा से cover करता हूँ so that everything is clear. Right, quantitative easing होता क्या है? According to the Keynesian theory के हिसाब से you pump in money into any economy, that economy starts to do well. कैसे? If suppose I give 1 lakh rupees to every citizen of our country, then everyone will spend more, then companies will sell more products, then वो sell ज़्यादा करेंगे तो they will definitely increase their production. When they increase their production, they will give out more jobs. When they give out more jobs, our salaries will increase, right? So the entire economic cycle does well. Now, to give quantitative easing, give stimulus packages, there are two things. First, the government gives away money. Like if you saw recently, if you have been following the news, our Prime Minister, Honorable Narendra Modi, he gave a stimulus package of 20 lakh crores. Right? If you see USA as well, it's been increasing. It started from 2007, 2008, which was the last significant quantitative easing by Fed in America. Now, if you see the records, they're skyrocketing, the amount of quantitative easing and stimulus packages they have given. Right? So this is a trend. India भी ये कर रहा है, USA भी ये कर रहा है, and all other countries are doing the same thing. Now, while giving quantitative easing, first, the government gives money. Second, the banks reduce their interest rates. Why? To increase liquidity. Now, when I talk about bank interest rates, I mean both loans and the interest rates we give, and on the savings account or on the fixed deposit. And the deposits, the interest rate we get. So when I say bank interests are getting down, I mean both savings account or basically the interest we are getting or giving to a bank, both are reduced. Ab hoga kya? Because the interest rate on the loan I'm getting is been reduced, so I will take a loan for a bigger car, I will take a loan for a bigger factory, a bigger house. Right? Now, on the other hand, the interest rate on my FD is reduced. So मैं क्या सोचूंगा? I'm getting such low interest rate, why not just spend it? Why not just put money somewhere else? Right? These are two possibilities, and this is what is happening in quantitative easing. Now, I am here to tell you that yes, in this situation, you might be feeling the burn. There might be pay cuts, salary cuts, there might be businesses. Host aapka business has not been doing well in this time. But please understand, do not keep your money in cash. Again, when I say cash, I mean bank deposits. Right? Why is that? Because if you see the FD interest rates right now, worldwide I'm telling you, USA is 0.02%. Japan is minus 0.10% on this is the annual return I'm telling you for a fixed deposit. एक साल आप fixed deposit डालोगे तो the return you get in Japan is minus 0.10%. In Germany you get minus 0.1%. In Switzerland you get minus 0.75%. In Denmark you get 0.6%. USA, like I told you, you get 0.2%. In India currently, while I'm recording this video, you get an interest rate of 5.25%. That's it. If you see these interest rates, they hardly beat the inflation. They're hardly beating the inflation, or maybe I'm using the word hardly. Technically, if you actually do the maths, in most situations they are not. So don't put your money in bank. I'm not telling you that bank deposits are bad. I'm telling you that as of now, in this situation, bank deposits are the worst thing you can do for yourself. right? What are the investment options? You can put your money in bonds, in debt funds, you can put your money in gold, you can put your money in real estate, you can put your money in stock markets, and stock market itself has several options. You can put your money in index funds, you can put your money in ETFs, you can put your money in mutual funds, you can put your money in derivatives. There's so many options, right? Again, what financial asset you should choose to invest depends on your risk profile, right? So if you're just beginning, I would suggest don't take very high excruciating risk, but what you need to do, please shift your bank deposits to at least gold. That is the safest thing you can do, right? And gold is safe. Do that. Why? Because the interest rates you're getting on your bank deposits are nothing. They're hardly beating the inflation. Let me explain the other logic of it. Now, when you give stimulus packages, quantitative easing, you know what happens? Inflation happens. अब inflation होता क्या है? Again, I'm going to explain in very simple terms. Even if you don't have any economic background, this will help you out. What is inflation? Basically, in an economy wherein the demand is higher than the supply, inflation happens. Okay, to give you an example, let's take my phone. Let's take this phone. Okay. Now suppose I am the seller. ये मैं फ़ोन बेच रहा हूँ 15,000 का. I am selling this phone for 15,000. ठीक. There are 3 people who are buying there, sitting. There are 3 buyers और मैं फ़ोन बेच रहा हूँ, and all of them want to buy this phone, and I am the only seller. So who will I sell this mobile to? I will sell this phone to the person who's giving me the maximum price. Am I right? So if one person says 10,000, the other person says, so I'll give 15,000, another person says 17,000. Who, as a seller, who will I sell this phone to? The person who's giving me 17,000, of course. So what is the price of this phone? 17,000, right? LTP का concept है, last trade price. If you're not aware of this concept, please be sure to watch the entire video of stock market for beginners which I had given. That will give you complete clarity. ठीक है? ये situation है. तो अभी आप, as a seller, I will sell to the person who's offering me highest for the product, right? These are simple rules of economics. Now, while quantitative easing is happening, stimulus packages are issued. होगा क्या? All 3 of them will have much more money. Now, will I sell this phone for 17,000? No. One person will say, Harsh, now I have 17,000. Another person will say, Harsh, I'll pay you 20,000. Another person will say, Harsh, I will pay you 30,000. Now, what price will I sell this phone for? 17,000? No. I will sell it for 30,000. So the price of this product of my mobile phone from 17,000 directly jumped up to 30,000. This is why inflation happens. So inflation, बहुत simple term में समझा रहा हूँ. In any economy wherein the demand is higher than the supply, supply से ज़्यादा है, demand is higher than the supply, the seller will always sell his product to the person who wants to bid the highest. If you do quantitative easing, then everybody has money, then automatically the bids get higher, so the price of everything gets higher. And this is a very simple concept of inflation. So right, in economics, there's nothing as foolproof. In stock market, there's nothing as foolproof. Everything has a benefit and a ill benefit. Everything has a pro and a con. Okay? So we have to balance things out. That is how it works. Up just imagine, if so much of stimulus packages have been issued, not only in India, I am talking about worldwide, issue है तो inflation होगा, definitely होगा, और हो रहा है. Now, are these FD rates, if you put your money in bank, is your money safe? It's not. It's depleting by the day. If you're putting your money in cash and you're thinking the cash is the best situation, it's not. So invest your money. No, I'm not telling you to invest in stock markets. I'm telling you to invest your money anywhere but banks. Do not put your money in bank deposits or FD accounts. Please, you can, again, I told you all the options. You can go for debt funds. You can go for gold if you don't want to take massive risk. Otherwise, you can go for real estate. If real estate mein hota kya, you need a lot of money and the money gets stuck. If you're not comfortable with that, you can get into equities. You can get into mutual funds. You can get into derivatives. There are several things. But please, take this as a wake-up call. Do not just allow your money to sit quietly at a bank deposit, because trust me, you will be the biggest loser at the end of the game, and that is why I'm telling you it's simple economics, right? And I urge you, whatever I've told you, don't just believe me, study it. See the worldwide situation, see the quantitative easing I'm talking about, see the facts yourself, and see how much quantitative easing and stimulus packages have been given worldwide. Again guys, to summarize the entire situation, there are 3 points. First, purchasing power parity. The amount 1 lakh can buy right now will drastically reduce what the amount 1 lakh will buy in the near future. Why? Because of inflation, which I just explained to you, the entire concept and how it is affected by quantitative easing and stimulus packages. That's point number one. Point number two is that yes, if you invest in some asset, your asset value might be volatile, it might increase or decrease, but you can take this for certainty that the value of your currency will purely depreciate. The value of rupee, the value of dollar will depreciate. It will continue to depreciate further. So, and even more faster because of the current situations. So it is much wiser to put your money in proper financial asset. And number three, the most important, cash. When I say again, I mean bank deposits. Cash is supposed to be spent. Cash is designed in such a way that it is supposed to be spent, and if you just hoard it and if you just save it and just collect bundles of it, uska kuch bhi point nahi hai if you just keep adding up our FDs, because ultimately it's losing its value. So take this call as a wake up, take this entire video as a wake up call, and please don't put your maximum assets in the form of cash and in bank deposits. Invest in something. It's very important, right? So that was my message for today, guys. And again, if you are someone who's in a job, I get it, you don't have time to invest in stock market, you don't have time to think about this because आप अपने job में busy हो, I understand, but please get this, take this as a wake up call. Do not just keep your money, putting your money in banks. That is the biggest crime you can do. For anyone else, the same thing, right? And if you know someone, if your parents are in that situation, or your children are doing this situation, or your siblings, or your wives, or your husbands, or anyone, share this video with them and encourage them not to put all their deposits in cash. Thoda bahut, when I say cash, I mean bank deposits. Thoda bahut bank deposits is okay, but do not keep it completely in that, because that will be the biggest crime in our era, right? To quote Ray Dalio, cash is trash. To quote Ray Dalio, cash nowadays is just trash. Right? So that was it for today. I hope you liked the video, and give a like button if you liked it. Subscribe to the channel if you want more content like this, and I'll see you next time on this channel. This is Harsh Goela from Goela School of Finance, financially empowering you.